Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Tuesday, July 24th, 2018. Before we get into the charts, let's just take a look at the economic calendar. This a lot on store this week, especially later in the week here. Tomorrow, let's see, starting out, we don't have to note each and every one of these, but the ones that have the potential to move the markets. I'll watch this one, the EIA Petroleum Status Report, because crude oil you could definitely impact where the energy sector is going. So keep an eye on that one and watch around 10:30 tomorrow Eastern time. And then the big ones this week are durable goods, 8:30, about an hour before the market opens on Thursday, and we also have jobless claims as well. So look for some volatility pre-market on Thursday, most likely, and then the big one too, GDP comes out on Friday at 8:30 a.m. Eastern time. So that's what we have to look for this week. And of course, we continue to see some big earnings coming out this week. This is tomorrow morning right here, Wednesday. You can see some of the big names here. And of course, you can go to right side of the chart on the home page on the right hand side under Tools of the Trade. There's a link to this earnings calendar. Very useful tool. And if you want to know when your positions report, just type it in. Well, it's up on the top of the page. There's a search bar, and you can type in any ticker symbol and see when they report. So as you can see, tomorrow morning we'll have a couple big move potential. Not, I wouldn't call them market movers, but these are stocks to watch: Boeing, Grubhub, Freeport McMoran, UPS. And then most of the big earnings this week come after the bell. We have Facebook. This is one of the big FANG stocks, market leading stocks. So there's almost certainly going to be some after hours movement in the queues tomorrow after Facebook reports after the close. And then, of course, we have a bunch of chips stocks this week. AMD is reporting tomorrow after the close. And then we roll into, let's go into Thursday, take a look because there's a couple of big ones there to note. Thursday morning, here's some names right here, and these are just ranked by popularity and the potential to move the markets. And again, none of these are big market moving stocks. You're not going to see anything huge in the indexes. But then Thursday after the close, absolutely. And this is the one out of all the FANG stocks. If there's any that I think are going to surprise to the downside, it's this one right here, Amazon. Based on my read on the chart and everything else, keep in mind this is a not only one of the heaviest components in the tech sector in the Nasdaq 100. But it also makes up, this stock alone makes up about 1/4 of the returns of the consumer discretionary ETF. So big component here, and undoubtedly we'll see some movement in the market, and that can go either way, of course, and we'll just follow up afterwards. And as I often say, it's not the initial reaction after earnings. You got to give it a little minute, give it a few minutes, wait for the conference call, and then more importantly, see how the market trades the following day once all the big players are in there and there's more liquidity. And you'll see what happens. So that's this week, and then finally we wrap it up on Friday with Friday morning with the two big 800-pound gorilla and its cousin there, Chevron Texaco. ExxonMobil is the largest energy stock by far. Chevron's the second largest, and these two alone account for, I think it's half of XLE, the energy sector ETF. So if you want to know where the energy sector is going, you only have to know where these two go. So keep an eye on those, and there's Twitter as well. All right, so that's what we have on deck this week. So strap in and hold on because we're probably going to see some increased volatility with both those economic reports and some of these heavy hitters reporting at the end of the week here. And as far as the markets, the recent bias continues to be upwards. We're just kind of slow grinding up. We had the SPY was up about 0.5% today. Here's that divergent high, still very much intact. I don't know why I have it written twice here. So there's a divergent high. We had a divergent high here. This just continues to extend these divergence lines, as I talked about, and they have not even come close to being negated yet. In fact, we can see right now, you can see this one, the PPO is starting to roll over, so we're about to confirm this potential divergence right now on SPY. But as of now, the trend is up without any sell signals, and these are the levels to watch. S1, really, that's what I'm watching. Charlie, probably the most important near-term level, at least on this chart, is right here, around that 279.50-ish area, because that's your previous reaction high. So what we had here is we had a breakout to new highs, a successful back test, and we're starting to move higher, but not very impulsively. This, momentum has been waning, and that's also evident. You can look at the momentum indicators, especially on the daily time frame and everything else. That's why we still have divergences all the way here from the 60-minute time frame out to the daily, and that's SPY. Nothing's changed for my view on that. And QQQ still, popped up to a new divergent high today, which again was mentioned as, having the possibility to do so, keeping these divergences right here well intact. These were the last time we had divergences, and we had a nice little, not a very big correction, but a little pullback, little correction there. Hit my second target zone. That ended with a divergent low. So we've had the rally. So we're just waiting for these divergences to play out. And again, nothing is 100%. I do think they will play out, and these remain the targets right now. These are unofficial targets. We have an official short trade. If you remember the site, SQQ is an active short trade. SQQ is a 3-time leverage short of QQQ. So levels to watch on QQQ, similar to SPY. You look for that previous high right there, breakout, back test, and then I added this uptrend line right here. This is a minor uptrend line, but again, it's really about this, all about this 177.69-ish level, because we've broken out. Any move back now, especially since we've already back tested that level twice, that could be early indication that this is a failed breakout to new highs, aka a bear trap, and then that could bring us down to this first target zone, second target, or that third target zone. The big news today, or at least not big news, but sort of bucking the trend, was IWM putting in a big bearish engulfing candlestick. IWM was down over 1%. And if we just take a look at this real quickly, we can see here, let me give you a clean board. If I can find a clean board, there we go. And so what I'm referring to here is this bearish engulfing candle. They come after or near the end of an uptrend. That's where you want to look for those. So we had one there. We had one right here. I'm just going to point these out. That definitely played out for a little bit of downside. We had a bearish engulfing there. That played out for a little more downside there. We had one here actually, because that engulfs, it just needs to engulf the body of the previous candle. So there it is. So you can see they're pretty reliable sell signals. Sometimes you'll get one in the middle of an uptrend or whatever, but you want to again look for these at the end of an uptrend. We had one there. We even had one here. This one didn't play out, but then shortly thereafter, this one did right here. And again, look at the follow-up action after those bearish engulfing candles. Oh, we had one right here too. I missed. I'll box that in. So it's something worth noting. Well, there's the candle. I was trying to grab the box tool, guys. There it is. So 1, 2, 3, 4, 5, 6, and now 7. Today's was pretty big. And speaking of bearish engulfing candles, I usually just do broad market analysis on the public videos, but I wanted to bring up mention this one. I don't believe we have an official trade ideas, although there are some I'm watching in this sector right now, and that's trucking. Now, trucking is an important sector. It's a tell for the economy. This is where our goods and services are being moved across. When trucking picks up, everything's booming. That's good. So what I'm noticing here is the trucking sector peaked back in January, just like the stock market itself. Don't forget, the QQQ is not the stock market. It is a tech fund with an Amazon kicker. The stock market is the Dow Jones Industrial, the S&P 500, more importantly, the S&P 500 because it's more diversified, and that also peaked back there. But again, now I'm talking about near-term action. This was very bearish today. We engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, you can count them here. In other words, bearish engulfing candle means you engulfed the previous candle. So we engulfed about a couple weeks worth of candlesticks there today. So quite bearish. Anything can happen. This one wasn't a bearish engulfing really. This also came at the end of a uptrend, and this one's not a downtrend. And this one's not really so much at the end of an uptrend, but it is. I haven't seen a candle like this. You can look at this chart. Just look at the size of that candle. You go back for years, years, and you don't see anything close to that in the trucking sector. And it was not a one-off, one single stock. I look at all these trucking stocks. I'm going through the components of the trucking sector just real quick, and you can see the big red candles there. Um, and they're powerful. They engulf a lot of previous day's action. We had another big red. Here's one right here, for example. SNDR had a big red bearish candle the other day. Prices tried to creep back up and regain it, failed again. This is not bullish price action right now. Something's going on in the trucking sector. And here's one that failed, tried to take out its highs. I don't know. This one might have had earnings today. That's a big intraday range, and the stock ended down 10% after an intraday range here. It looks like of 21%, and you can see. So here's another great example. And let me just check one thing real. Yeah, sure enough. I just wanted to check the earnings, and it reported yesterday after the close. So there's another example of why I like to always say let the dust settle. If a stock is reporting earnings, we saw this big turnaround the other day with Netflix, although Netflix closed down and is still down, and we shorted that one. We nailed. We waited till earnings were out of the way, shorted that one practically on the highs for the day after that big recovery rally they had that following day, and we're very well profitable on that one, and we're still not even to our first target. I have quite a bit more downside targets on Netflix, but here's an example of why not to panic overnight session or in the early trading session. Whatever happened here, it looks like this stock just shot up. There it is, popped high at the open. It must have had a lot of buzz in the overnight session, and then they faded that gap really hard and throughout the day. Again, that was over a 20 something percent turnaround. And the point I'm trying to make here, very bearish. Something's going on there, and not good when you see that failure came right at the previous highs. And finally, the transportation sector itself. As I said, it can be a tell for the stock market. This is right here. The green and red, the candlesticks are the transportation sector that I had up. This chart goes back to 2005 here. And what I wanted to show you is, back in 2006, right here, let's grab my circle tool. Here's where the transportation sector topped, and the stock market didn't peak until October of 2007. So what happened is transportation stocks started to go down. They peaked out, and that was a tell that something's wrong. The economy was slowing, whether the data that you're getting or not. Like, for example, Friday we're going to have the GDP report. That is one of the biggest hindsight indicators in my opinion. It's a big, well-watched report, but remember, it's reporting only quarterly. So you're looking at 3 months data plus a 1 month lag time to get the data out there. And then almost always GDP is revised after the fact. So we'll see what happens. And again, it has the potential to move the markets, but this GDP report coming out on Friday will most likely be revised down the road. And I just want to point out, you can look at certain things like this. Copper used to be a good predictor where the stock market's going, not so much anymore, but transportation sector and particularly the trucking sector is one that I like to watch. And again, you can go back over in time. We had a big correction in the stock market back in 2015. If we zoom in here, you can see once again the trucking sector warned of that. The trucking sector peaked back here in late 2014, early 2015, and the stock market kept chugging along, losing momentum but making new highs all the way until about mid 2015. Again, the white line is the S&P 500, and then that's when the stock market corrected after that. So just something to note. And again, right now, technically, these both peaked back in January, the S&P 500 and the trucking sector. However, the S&P 500's been stronger. It's not too far from its new highs or old highs or those highs, while the trucking sector continues to move lower. And after a day like today, it gives me a little pause. So that's that. Wanted to point that out. And then last but not least, I like to sometimes just jump back and look at the bigger picture again and why, despite the slow grind higher in the markets lately, I remain, bearish. At this point in time, intermediate term, we don't have, I'm sorry, short term, near term. We don't have any intermediate or longer term sell signals, far from it. But the divergences that are in place, again, this is a weekly chart, and I'm referring to the divergences, negative divergences on the momentum indicators. This is a weekly chart of QQQ. QQQ, here's the PPO, very steep divergences. And we had small divergences at this point. If you see this line right here, and you could actually between these two peaks right there, and that led to a little 12% pullback. But you go back for many years, since this bull market began, and without fail, these are all the negative divergence, the divergent highs, and 18% correction, 16, 13, 10, 26, 18. So my point being that yes, we had the little small divergence there. It played out for a small pullback, but those divergences have since expanded and grown, and I still think there's a bigger one coming, and that will most likely be triggered, or at least we'll have a fair degree of confidence that the bigger correction is underway once this uptrend line goes. So right now, there it is. QQQ is in an uptrend. There are not any sell signals right now on this weekly time frame or the daily. I'm just looking at the 60-minute charts now for a quick pullback trade. I think that's coming soon, but again, I wanted to show the bigger picture there. I mentioned that bearish engulfing candle in IWM a minute ago, and here's the IWM weekly, big negative divergence on IWM, some of the biggest divergence we've had in years. I mean, we had some negative divergence back here at this point before that correction. All the divergence lines aren't drawn out here. We had divergence leading up to that high as well there, but there's a trend line to watch on IWM, your divergent high. And SPY, things are a little quirky on SPY. We don't have any divergence now because we had that blow off top in January that just sent the indicators up here. The RSI had never, ever in history, I went back at least, I think, 2-3 decades, and the RSI had never been so overbought in the S&P 500. You're looking at an RSI reading of over 90 on an index. That's insane. So that has, so far all the makings of a potential blow off top, but we're not far off it now. So whether that's top or we go on, I can tell you this: if the S&P 500 does have some juice and can power on up here, it will put in a very large divergent high. So all we have to do is essentially match or take out that previous high. And as you can see, these momentum indicators are severely lagging at this point in time. And so therefore, in the coming, let's say, weeks to months here, possibly days. I don't know, depending where we're at. Should we make a new high, it would be a divergent high, and that doesn't mean the day we have a divergent high, there's a sell signal in the markets. Just now, at that point, divergence has been put in. Then you look for another reversal. So I'll continue to, trade long and short. The best looking stocks long, the most bearish stocks short. Same with sectors. And again, this week, kind of keep it light. I've been reluctant to put out official trade ideas on the site this week because of earnings. You're going to see things get chopped around. We already have a couple out there now, and you might notice some of the, like on SQQQ, what I've done is modified the stop based on the daily close, and that saved us from a stop raid today. That trade, I'm not going to go into the details because, again, that's an active trade on the site, but it's still active, and we avoided being stopped out, kept the stops relatively tight to begin with, and they would have ran them if we had it based on an intraday move because of that turnaround today in QQQ. You can see here's the Qs popped up and perfect backfill of the gap today. So you see there, this was yesterday's close right here. So the Qs were up about, pretty healthy, about 1.4% thanks to Alphabet. But the market turned around and said, well, Alphabet's good news isn't good news for the entire stock market or all the components that Qs, and they faded all of the gap 100% to the penny. And this is technical analysis. Look at that gap fill, backfill, boom, and then a little reversal, a little muted reversal there. So again, to be continued tomorrow and into next week. And I think I have a pretty good idea. If those divergences that I've highlighted on the 60-minute charts are going to play out, they will begin to play out by early next week based on, and probably after the Amazon report on Thursday, I think that was. All right, we'll follow up and see how things work throughout the rest of the week. But as of now, best to keep things light. Let these earnings reports and these big potential market moving economic reports get out of the way, and then might be able to gauge this market a little more aggressively. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.